Hello, today is the 12th of January 2011. Welcome to today's silver analysis, and we continue to consolidate and correct through time amongst the 29 level or so. The price memory is showing that we have been trading around the 29 to, well, around the 29 level, we'll say, for the most part of this current rally. And we've been mainly correcting sideways over the last so many weeks, last month or so. And what's been going on right now is this has given the market some time to consolidate its decent size gains that it's been having. This trend line, it's not only over 32 now, but it is actually over 33. And this is telling us that it is ready at any time for a breakout, but at the same point, if the market retraces lower, then we can say goodbye to this trend line for an X period of time, whether it be a month, 3 months, 6 months, or whatever. But as far as what price action is telling us, we had the selling that started in the earlier parts of January, bringing the market from below or from above 31 down below 29. Since that point, it has consolidated well within the 28.5 to 29.5 level as it went below the 5, 10, and 20-day moving average. Since then, it got above the 5. It has also gotten above the 20, and it is now trying to test the 10-day moving average. We do have this rising 5-day moving average. So on any pullbacks to keep this bull market alive on the intermediate term time frame, what's important is that the 5-day becomes support and upwards to 61.8% of the entire rally. What I mean by that is you take the low point and whatever the high point happens to be, you take the difference of those variables. You multiply that by 61.8%. That's the most you want to give back. And if it does manage to give it back, something like this, and then that can give it enough strength to make some higher gains. What I do like about this market is that this 20-day moving average has been pretty remarkable because it's been the support line for the entire bull market, and it did go below it here, but when it came up to this level, it found resistance and corrected through time rather than price on the shorter term time frames, because it came up here and it could have very at the 29.50 level, it could have very easily came back to 29 or anything in that level. Instead, it stayed within this range, and at the end of the day, it broke above this level. So that's definitely a bullish sign within the silver market. And what I haven't been talking too much about is this 50-day moving average. The last time that the silver market has either been below the 50-day moving average or has even touched the 50-day moving average was on the breakout day of the 24th of August. Therefore, that's September, October, November, December, January. It's been about almost 5 months that the silver market has stayed above this 50-day moving average. So whenever you see any little bits of selling for that first little bit, I most certainly will have a hard time trusting these sell-offs, because every single time it has managed to go below the 5, it has recaptured it most of the time on the first test. This was the first test. It has recaptured this 5-day moving average, and we'll wait and see what happens over the next little while. And thank you for watching this presentation. Bye-bye.